So if I look at cash budgets, budgets has two types of budgets that they can bring into play. You have your cash budget, né? And your projected income statement. Oh, that came in. Projected income statement. Okay. So cash budget is about planning future cash. Now we talk receipts and payments, or we talk surplus and deficits. Okay? Projected income statement, now we plan for future income and expenses, or profit and losses. So, your cash budget is about the money. So that would be transactions that goes into the CRJ and CPJ. Your projected income statement is about your income and expenses. So this is only nominal accounts. I just want to go through the difference between receipts and income and payments and expenses, because you guys always struggle with that. So, if I say to you, I rent out my building for 1,000 rand a month. So my rent is 1,000 per month. What is my rent income? 12,000. Okay, can you see? I just want to see what is my income for this financial year. Now I say to you, I received 13 months. What is going to be my receipt? What did I receive? Meaning, how much money did I get? 13,000. Can you see? In your income statement you would have said, so you actually would have seen in the trial balance, your rent income would have been 13,000. And they would have said, you received 13 months, then you would have divided it by 13 to get 1 month in advance, and you would have subtracted it to get the 12. Because in the income statement, I'm like a horse. Have you seen horses always wear those flaps at the side of their head? Have you ever wondered why? They are wearing that. They are wearing that so that they can literally only see what's in front of them. So that they don't get, because they get scared easily. So if there's sudden movements on the side of it, that they don't throw the rider. So an income statement is like this. You only look forward. You only look at this financial year. Okay. So, let's go on. So now they like to ask definitions. So the standard questions with budget definitions is, why do you set up a cash budget? Why do you set up a projected income statement? Okay. Then the other standard questions is, what items will be in this one but not in that one? So go make sure you understand that. Then they're also dividing the question in two parts. You'll see paper 2 is always, every question has got 2 parts. Okay? And saying that, they always like to basically match that with another question. So in this paper they matched that with bank recon, but sometimes they match it with inventory. Yeah, okay. So let's go on. So now if I look at my budgets, the first thing they want to test is either the debtors collection schedule or the creditors payment schedule, because they work on the same principles. So they're going to test that. Then they're going to test either your budget or your projected income statement. They're going to give you, that is what they do 9 out of 10 times, but we know that Monday can maybe be moving it not 10 times to 11 times, and then they ask you that, things we don't expect. But what they usually do is they give us the budget or the income statement with calculate figures 1, 2, 3, and 4. Okay. Go make sure that you know your calculations. Your favorite calculations that they ask is there was an increase or a decrease, and you need to calculate it. So you always go accordingly. Before the increase plus the increase gives you after the increase. Okay? The before is always the 100%. So, plus whatever the increase gives you the after. Now the question is, because we're going to do UK, which one are they asking? If they give me, for instance, May and June, ne? Now they give me June, ne? Now I know June is 110 and May is 100. If they give me May, I know May is 100 and June is 110. And the same with the... So that's the first one they like to ask. The second one they always also like to ask is they like to ask the increase or decrease in the fixed deposit or the loan. Okay? Yeah, baby? They like to ask the increase or decrease in the fixed deposit and loan. And by doing that, what they will do is they will give you month 1 and month 2 the interests. Okay? You guys get that? So, the easiest way to calculate that. So let's just say they only give me 1 month. They'd only want to know the fixed deposit amount or the loan amount. I would do it like this. I will take the interest of that month, ne, times 100 over the percentage that they give you, times 12 over 1, and that's going to give me my fixed deposit or my loan. Now, if I want to get the increase or decrease, I don't take the interest for that month. I take the difference between month 1 and month 2. So in other words, if they tell me month 1 is 1,000 and month 2 is 1,100, and they ask you, calculate for me month 1's fixed deposit, I will use 1,000 rand times equals. If they ask me month 2, I would say 1,100 times equals. If they ask me the increase or decrease in the loan, and obviously here you can see it's an increase, I would take 100 times equals. Okay. So that is the famous ones that they like. Remember, with the creditors, I work with credit purchases. Credit purchases is not equal to credit sales. You can't use credit sales for credit purchases. You know, take the credit sales and work out the cost price and say, oh, that's the credit purchases. Because the way I buy my stock does not determine how I sell it. I can buy everything on credit and then sell 50-50 cash credit. Okay, so be careful for that. But your main thing that you need to remember is always this. Your total sales, ne, times 100 over 100 plus the markup, ne, will give you your cost of sales, which I will assume equals your total purchases. Okay. Then you need to divide it according to cash and credit, and if there's a discount, it would be 100 less the discount over 100. And they can even go further, not give you total sales. If they give you cash sales and cash sales percentage, you can use UK to get the total sales. You all know what I'm talking about. Yes. Okay. So that is your biggest calculation. You can start where they say your credit sales is 30%, then it's going to be the credit sales times 100 over 30 gives you total sales. Times 100 over 175 or whatever gives me cost of sales equals purchases. Times 30% gives me credit purchases. Times 95% gives me what I'm going to pay. Can you see? It can be a very long calculation. You don't have to put equal signs because they're all times. So you can just times. And if they give you this answer here, you just reverse it. Remember, as soon as they give you an answer, you just do the opposite to get where you started. So if they give you the amount that you pay, now I reverse it, then it would be 100 over 100 less the discount, times 100 over 30, times 175 over 100 equals. You guys get it? Okay, so that's the first part of the question, all about calculations. Okay? Second part of the question, they will ask you, oh sorry, I'm waving papers in front of the camera. Second thing they ask you, second part of the question, is they will ask you comments. Okay, now, comments, it's important that you are able to make links. Okay, so sales is a big thing. That's your main reason why you have a business. So your sales you can link to advertising, marketing. You can link it to packing material. You can link it to deliveries to clients. And I'm quite sure there's others that I'm not thinking about. Commission, you see, taught you. Commission, okay. Fee income. Now, fee income is the same as current income, which is the same as the services that I deliver. That one is linked, first of all, with consumable stores, because I use consumable stores in my service. If I have to unclog a drain, I need to take Mr. Drain with me, you know, that thing that you put in and then puts in the to open the drain. Okay? Let's think something else. If I buy land and buildings, now I have to remember there's no more rent expense. No more rent expense. But I can have a rent income now. But what other costs go with it? Oh, the interest on loan because I had to make a loan. What else? Property tax rates. Guys, listen to me. In the test, you all said water and electricity. Not all, most. A lot of people said an extra cost with owning a building is water and electricity. That's not true. You guys, please listen to me. In a rent agreement, it could be that they include water and electricity, but it's not a rule. 9 out of 10 rent agreements does not include water and electricity, because then it just gives your tenant free way to use as much and to waste as much. Okay? So usually, even if you are renting, you pay, you connect and you register the usage on your own personal name. You pay it. So if you rent the building or if you buy the building, you pay your own water and electricity most of the time. So you can't just assume that it's part of the rent agreement. Okay. But if you buy the building, you're definitely going to pay rates. You're definitely going to do maintenance. Ne? Because now it's your property. What is good about buying land and buildings? Your assets increase. You now have an asset. Okay. The same with vehicles. Instead of doing land and buildings, they can say, instead of leasing machinery, we are now buying our own machinery. Then it's the same things. I have to pay interest on the loan now. I have to do maintenance. I have to do upgrading myself, especially if it's computers. I need to go and upgrade the software, because most of the machines these days are robots. So I need to bring in specialists to upgrade and maintain the machinery. How many of you have had CT scans or anything like that before? You guys, those machines, you know that they service. When I went for radiation, the one day I couldn't go because that day they had the maintenance guy coming in servicing the machines. You know that it cost 100,000 rand to service those machines, because those things had to be so accurate. Can I explain to you? That machine is easily as big as half of this classroom, but it is calibrate it in such a way on this computer that it will burn a spot as big as the front of my finger. That's how accurate it is. It's extraordinary doing that. So now, can you see how much cost implications that have? Because they didn't rent the machine, so now they are. Yeah, if they rented the machine, always remember, renting is not necessarily bad, because with renting, you're not responsible for the maintenance, number one. And if your rent agreement, your lease agreement is for a year, and there's a better model coming out next year, you can get the better model. So you are more flexible in upgrading your equipment more regularly. Okay. Chap. Ooh, I was going off point here, but let's go on. So, just go look at your links, okay? Things that fund things, ne? I want to buy the building. What's going to fund me buying the building? Well, go look at your loan. Go look at your capital. Maybe the capital increased, or your ordinary share capital increased. Remember budgets. Don't get a fright, because in budgets, they can test companies. They can say, we issued shares. Then it's a cash receipt. They can say, we pay dividends. Then it's a payment. They can test it here because it's part of your syllabus. Okay? So, funding could be, I issue more shares. Funding could also be a fixed deposit that matures. Funding could be a sponsorship. And so forth and so forth. So go look at things like that. Okay. Funding is most definitely not debtors paying you, because debtors paying you is part of your daily income. And unless one debtor owes you millions and he pays everything all at once. And that you will definitely see on the budget. Okay. Now, always remember, there's different ways to comment. First way is you're going to say, let's quickly think. The most logical way is to compare the budget with the actual. Okay, that's usually your first way. And then usually they give you a column where they say the variance. The variance is like that. Okay? And then you can say, oh, we budgeted 10 Rand, but we spent 20 Rand. Okay? And just for that, you already get ticks. Then comes the insight. Was this a good or a bad idea? When it's advertising and maintenance, those two things you never skimp on. If you budgeted 4,000, you use the 4,000. Don't not use it. Why? Because it's going to cost you. Advertising is going to reflect on the sales, that the sales dropped. Maintenance is going to reflect in next year's maintenance that's going to be overspent. Or people not being able to be productive because the machines suck. Okay. So just go look at those things. Is there any questions about budgets? I think we did a lot of budgets. I think you guys should be fine.